Yes.
Modano, it's happening.
I sold. Pump it.
So an update here on DCG, Genesis and Grayscale. We haven't heard from Barry in over a month, but we do have news from Grayscale out breaking today. So let's jump into what has happened here. We know that Genesis Lending owes Gemini Earn participants around $800 or $900 million. DCG actually owes Genesis $1.7 billion in 2 different loans. And so there's a really tangled web here of just madness. So Barry, is he missing? Yes or no? Well, we may have found that he has been dumping over the weekend. But first and foremost, this breaking piece of news here from Wall Street Journal. Now, this one is being covered by CoinDesk as well. However, CoinDesk is owned by DCG. So if you read that one, I feel you're probably not getting the full story. So here we have it. If Grayscale's Bitcoin ETF dreams fail, the firm may try a tender offer, says the CEO, Michael Sonnenshein. What is a tender offer? First and foremost, tender offers are typically made publicly and invite shareholders to sell their shares for a specified price at a specified window of time. The price offered is usually at a premium to the market price and is often contingent upon a minimum or maximum number of shares sold. As we know, gbtc trades at a massive discount to the net asset value. This is an attempt to try and close that gap, from what I understand, by selling the underlying Bitcoin. This seems to be an escape route that they are now exploring. Within this letter that Sonnenshein has posted, they are exploring new options to return a portion of the Grayscale Bitcoin Trust capital to shareholders. The underlying capital of GBTC is BTC. These options could include a tender offer for up to 20% of the outstanding shares of the $10.7 billion trust. So this sounds to me like a move to force the ETF through, like try and play a bit of hardball here with the SEC, and also shows that they're desperately trying to raise capital here.
I've got nothing left. I've got nothing left.
So this tender offer is one of the routes they want to go down if they don't get the ETF accepted. This has been knocked back numerous times at this point, and Grayscale have actually taken the SEC to court over this. They state that Grayscale doesn't have a specific timeline for when it would explore options beyond the ETF conversion, but it is prepared for all scenarios. Grayscale said the potential pursuit of a tender offer is dependent on relief from the SEC and shareholder approval, and the company added it may consider doing additional tender offers if the first such attempt is successful. DCG, Genesis, and other affiliates collectively own nearly 10% of the total shares outstanding of GBTC, and they're only permitted to sell up to 1% of these shares on public markets every 3 months under Rule 144 of the Securities Exchange Act. So TLDR on this from DGen Trading here. He says, unpacking the mess that is GBTC right now, because Digital Currency Group is stuck with 10% of the outstanding supply of GBTC and there is no way to sell it and no incoming relief due to that Rule 144, the only way for DCG to monetize GBTC is literally to sell it. So if Grayscale does not have the money, how does it tender the shares? Simply put, it sells out the Bitcoin that it has. The maths on this one, on a 20% tender, that means 128,000 Bitcoin will be dumped into the market. A response to this isn't a tender offer to buy shares from existing shareholders. He says for a normal co, yes, but Grayscale has no cash, so tendering the shares to it equals they have to sell out the assets to redeem you. So if Grayscale can't get the ETF through, they need a way of monetizing, they need a way of getting the value out for their shareholders, and that is through this tender offer. No specific timeline on this one, but you can see the cogs are in motion for a dump of BTC from the trust. Now this comes fresh after a weekend of dumping by Barry and Co. This is the DCG portfolio, and if you go over to the change over the last 7 days, we can see the worst offenders here. The likes of Filecoin down almost 30%, Stacks down 25%, Flow down 19%, and when you look at some of these charts, there was mass sell-offs. So it seems Barry was dumping his bags over the weekend. These coins are all down massively. That is one 15-minute candle on the screen right there, where Filecoin went from $3.80 down to $2.50. against.
Bottom sold.
That is some real panic and someone liquidating their bag rather quickly, and this all aligns with a big bag holder in DCG, someone who's been looking for capital. So we're not sure if this is preemptive before Chapter 11, or are they just trying to raise funds to repay some of these loans that are outstanding, as we're seeing more and more contagion effects here, and what seems to be them looking behind the sofa for pennies. A rather amusing one here is that of Near Protocol. Back in April, Barry stated, time for the big reveal, DCG's new third largest holding is Near. Today you go over to DCG's portfolio, you go on N for Near, and it is no longer there. Near also dumped over the weekend. Maybe they had a big bag OTC as well, but they've removed that from their website. So it looks like Near is no more for DCG. Now, this latest letter from Michael Sonnenshein comes after around 10 days since the SEC filed once again stating they do not want an ETF for GBTC. If you go and check out the GBTC discount to NAV, the net asset value, i.e. the underlying Bitcoin, it's currently trading minus 48.5%. This after Cathie Wood bought the dip at around minus 45%, while the dip just keeps on dipping here. Then we've also seen more contagion effects. This is a firm I hadn't even heard of previously called Bitvarvo, an exchange out in Holland. Bitvarvo custody has some exposure here to DCG. They state they use DCG and its subsidiaries for off-chain staking services. Now, this company has stated DCG is currently experiencing liquidity problems, hence they're trying to raise all these funds. As a result, DCG has suspended repayments until this liquidity issue has been resolved. They've been told by DCG Group that they will have a plan in place and there will be a resolution within the coming weeks. These guys will be reimbursed apparently. They're in the hole for around 280 million euros. However, Bitvarvo has said they will pre-fund any locked assets on DCG to ensure they cover the shortfall if customers want to withdraw. Essentially, they're saying we will take the hit here if DCG goes under and ensure our customers are not affected, which seems to be a very noble response that we haven't seen in crypto as of late. So this looks to be a way that Grayscale can now sell off some of their Bitcoin and try and plug the hole. Let me know your thoughts on this down below. How bearish is this for the market right now? Or are these guys playing hardball to get the spot ETF approved ASAP?
Bitcoin will go to fucking zero.